Traders, happy Thursday afternoon. I hope you had a great day. This is Sami from the Black Room. I wanted to do this video for you on the play of the day, but also share with you one of my favorite tips. And the play was the KBH. Stock had a professional gap down just under support, perfect location. The stock had a considerable amount of shock value, not based on yesterday's bar, but based on typically we like stocks to print a big green bar before they gap down, which ensures that traders get trapped because a green bar is indicative that people bought it, right? And so when the stock gaps down the next morning, everybody is trapped that bought it the prior day. In this case, we have a red bar. But what was good about this gap is the fact that this is a very weak stock that recently showed strength. So it gave hope, right? It gave hope to people, and today took away the hope by gapping under the support. So I love this gap. This and another gap were my favorite two gaps today. At the open, it set up short. So let's go to the 1 minute chart. I'm going to show you the setup on the KBH 1 minute chart. Okay, there it is. Just took a second to come up. And the 1 minute the setup failed. The initial play right here, short on the low of the day, stop over, I think 1850. This was just a verbal call out. It wasn't posted, and it actually didn't work. As you can see, the stock, after breaking the low of the day, went back up and popped. This is just an early morning volatility. It doesn't really mean that the play was not going to work at all. It's just the stop was probably too tight for the early morning volatility. Barely took out the highs and then it rolled over again. Now, the play was this. So here it is. Too many red bars in a row. Can't enter here. But look what happens. Goes sideways. Look at the nice tight base. 1 penny base. Pops a little bit on volume, which means that's people buying it. And then it breaks down. So the play was short, called short in the black room, under 1757, 56, stop over 68. So under 56, stop over 1768. It looked like it was going to work because after a few minutes, it printed that big. It wasn't a big green bar, but it happened on big volume, but produced no follow through, and it worked. It covered half, and then eventually trailed the back half. Okay, so nice play, but check it out. And at lunch, this is when we actually were at lunch, the stock puts in a what? A sell setup, plus, this is what's known as a sell setup when you have 3 or more green bars or 3 or more higher lows, and then a red reversal bar. So that's a sell setup. Plus, this is known as a 1, 2, 3 pattern. So this was a play on a play, or play inside of a play. I love it when I get 2 setups, 2 patterns inside of one. So I typed it into the room. I wasn't on the mic at the time. We were on lunch break. 1726 by 1743. Targets the lows, which was 1682, and then gets right to target. Okay, 1682 to the penny, and then bounces, trailed out. This was 2.5 hours, I think, close to 2.5 hours. The morning play was almost also 2 hours. So between the two, pretty good. Now let me show you the. Actually, I'll just go ahead and show you the. This was my best play today, and it is. Oh, there it is. KBH, $2,300. Okay. I did a few other things. Actually, I'll show you the EXT. EIX. I'll show you the EIX in a minute, but let me show you the tip of the week. Okay. Here it is. It's a rule that almost never ever fails, or that when it happens, it always produces follow through. What's the rule? The rule is if a stock makes a new low and the bar that broke the low of the day is violated, that bar's high. If the bar's high is breached by the very next bar, the stock is gonna rebound. It goes higher almost 100% of the time. So let's say it one more time. If a stock makes a new low, breaks down, the breakdown bar's low is taken, the breakdown bar's high is taken out by the very next bar, that is a breakdown failure and the stock will get bought. The way I play it, I don't play it long when that happens unless it's also extended to the downside, meaning it's a bit climactic. And then we get the breakdown, and then the breakdown bar's high is negated or is breached by the very next bar. Then I play it long. So in this case, I didn't play it long, but that's what happened. The breakdown bar on high volume was taken out on the very, very next bar. And so the stock made a new high. Does that make sense? So this is a rule that I challenge you to prove wrong, or to find examples where it's not true. Happens almost 100% of the time. All right. The other thing that I wanted to show you was, what was the play that I was just going to show you? It was the EIX. Okay, just want to show you the EIX. I actually could have made a whole lot more money on the EIX today if I had done it, but I didn't do this play. This is my favorite reversal bar of all time. I call it the battle bar, okay, which is a narrow body bar on high volume. Again, it's a narrow body. It's not a narrow range. These are called narrow range bars. The range from high to low is very narrow compared to the other bars. This is only the body is narrow. This is called a narrow body bar. Only the body is narrow, but the range from high to low, from top to bottom, is pretty much the same as the average range, the average bar, right? If the low of a battle bar is violated, it works almost 100% of the time. It follows through, to the downside. And it did. What a gorgeous trade. I mentioned it in the room, talked about it. This was a bit spready. So I didn't do it there, and I regretted it almost immediately. Somebody in the room did it, and that was nice. But that's the other tip that I wanted to share with you, is this narrow body bar. It's a battle bar. It represents basically a battle. Whichever group or side wins, that should yield the direction for the trade. That should tell you where the stock is headed. Okay? So just a short video to share with you these things, the 2 tips that I gave you, plus the play of the day from the Black Room. I hope you had a marvelous day today. I'll talk to you sometime soon. Take care, everybody.